This is Amit Pabari, founder and managing director of CR Forex. On 8 May video, we discussed that the pair is likely to take support between 8160 to 8180 area, and gradually the pair should move towards 8280 to 83 kind of a level because of 4 important reasons. We said that DXY will move higher, trade deficit will add pressure, Chinese and other Asian currencies are depreciating, and any escalation between Russia and Ukraine will add pressure on dollar rupee pair. Now let us see where are those factors currently and where the rupee is moving in coming days. Now let us understand each factor one by one. First is DXY. On 8 May, DXY was trading close to 101 level. We were expecting it to move higher. Eventually, it has come down towards 103 kind of a level. Now we are expecting DXY will continue to move towards 105 kind of a level because of 2 reasons. Debt ceiling issue is still there. Second, US economic data are coming much stronger than Europe and UK, which is going to put pressure on Euro and Pound. Second, trade deficit का जो issue था, वो that is going to move from 15 to 16 billion towards 18 to 19 billion dollars. Third, if you see Chinese currency and Japanese currency, both have given a breakout, and we are expecting the Chinese currency is going to move towards 7.10 level and Japanese yen is going to move towards 140 kind of a level. These all factors are indicating that ideally rupee should get weaker on a fundamental basis. Now let us look at one of the most important aspect, which is what is the RBI stance. Now to understand RBI stance, let me show you a chart. If you see the chart, it is clearly indicating that rupee has been moving in a range between 81.5 to 83.25 from last 4 to 5 months. At 81.50, 81.60 level, RBI is buying heavily, and at 83 level, RBI is protecting. Now we have to see in the coming week whether RBI is intervening at 83 to 83.25 or not. Technically speaking, if 83.25 breaks on a closing basis, then there are higher probability that the currency can move towards 84 to 84.5 level. But RBI का जो stance है, that is the most important aspect which we need to monitor in the coming week. Now let us discuss outlook for rupee. In the coming week, rupee is going to have a strong support near 82.55 level, and it will have a strong resistance between 82.80 to 83.25 level. There is going to be a tussle between fundamental factor on one side and on other side whether RBI will intervene near 83 level or not. We have to see which side will win. Till the time we do not have a clarity which side is winning, rather than anticipating the view, we should focus on the hedging strategy. Now let us discuss strategy for thin margin exporters like agri exporter or a chemical exporter. If someone with a thin margin exporter and they have taken a conservative costing between 82.20 to 82.50 kind of a level, to them we are suggesting that they should cover 70 to 80% of their exposure between 82.60 to 82.90 kind of a level. For remaining position, they can keep a stop loss of 82.55 and they can target 83 to 83.25 kind of a level. If someone has taken aggressive costing of 82.50 kind of a level, to them we are suggesting that they should cover 80 to 100% of their exposure between 82.70 to 83 kind of a level, and they should keep a stop loss of 82.55. The stop loss is 82.55. One common mistake which a lot of thin margin exporters do when rupee is trading near all-time high, they take aggressive costing and they do not follow the stop loss. I will request all of them that they should keep the stop loss tight. Currently the stop loss is 82.55 on a closing basis. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporters. Finally the wait for them is over. We have been suggesting them not to cover at a lower level and wait for a higher level close to 82.80, and finally that level has come. Now what is the action plan? Action plan number 1 is that they should ideally increase their hedge ratio towards 45 to 50% by selling between 82.70 to 83 kind of a level. Beyond 50%, they should wait for some more time by keeping a strict stop loss of 82.55. Now let us discuss strategy for importers. Importers who have covered till June end, they must have a gala time and they must enjoy. Covering beyond June, they can keep a stop loss of 83.25 and wait. And any importer who have not covered till June end also, they should just keep a stop loss of 83.25 and wait. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.